Hello everybody, and today we will talk about levels, the main tool for technical analysis. Without understanding what they mean, you won't be able to master the rest of analysis techniques. Therefore, we will consider what levels are, how to build them, and the basic of working with levels. Support and resistance are terms for two respective levels on the price chart that appear to limit the market's range of movement. The support level is where the price regularly stops falling and bounces back up, while the resistance level is where the price normally stops rising and dips back down. The levels exist as a product of supply and demand. If there are more buyers than sellers, the price could rise, and if there are more sellers than buyers, the price tends to fall. What are levels and why they are needed in principle is even intuitively clear. Much more and interesting is how to find and build such lines. And this is where some confusion begins. Neither theory nor the classic of trading have a defined answer. Each technical analyst trader talks about his methodology. On the one hand, that is good because everyone can build their levels according to their own vision of the situation and experience. And the bad news is that they're hard for beginners without experience to figure it out. Roughly speaking, the level line is built on two peak points on the graph. The support line is drawn on the price low points, the resistance line at maximum points. So, how to identify support and resistance levels? There are a few ways to identify support and resistance. It's quite easy to spot these levels, but they can be very useful in helping you choose the best time to enter a market, as well as there to put your stop loss and limits. To identify support and resistance levels, traders can look at three major data. The first one is historical price data. The most reliable source for identifying support and resistance levels is historical prices, making them invaluable for traders. The key is to familiarize yourself with past patterns, sometimes from very recent activity, so you can recognize them if they appear again. However, it's important to remember that past patterns may have formed under different circumstances, so they are not always a reliable indicator. The second one, previous support and resistance levels. You can use previous notable support or resistance levels as market for possible entry and exit points, as well as indicators of future movement. It's important to know that major support and resistance levels are rarely exact figures. It's unusual for market to hit exactly the same price time after time before reversing, so it's probably more useful to think of them as support and resistance zones. Technical indicators for trend lines can provide dynamic support or resistance levels that more as chart progress. Support and resistance levels for different markets will often be based on different factors, so developing the ability to recognize which levels are going to impact a market price can take time. For that reason, it's important to practice identifying support and resistance level using historical charts. And the main thing, how to identify the level. First, you need to see so-called peak on the price chart. So how to find them? Very simple. We are looking for a combination of three candles in which the main condition is met. The central candle is higher than the candles on the sides, or the central candle is lower than the candles on the sides. At the same time, it's absolutely not important what color and shape of these candles will be. The main thing is that the central one is shifted either up or down relative to the side candles. Let's take a look on the chart. As soon as you have identified one of such peak, you can immediately mark at the corresponding level throughout it, but it's better to wait for the price to draw a second peak in approximately the same price range. For drawing, we will use horizontal line. So as you can see, we can find here the level of support. If the price touches the same level twice in a row, it gives the right to draw a line along these 2 points and further focus on it, realizing that there may be a stop there. The line should be drawn strictly horizontally, as we can see. It's rarely happens that the peaks coincide 100%. There is always an error of several points. If the peaks don't differ in price significantly, you can need to draw a kind of a middle line between them. In the case when 2 consecutive peaks differ in price quite significantly, an entire area or price range can be selected as a level within these 2 extremes. And we also can see a resistance level, so we can just draw a line. And for your convenience, you can change all the settings by right-click and choosing properties. So you can choose the exact color you're interested in, and in our case, that would be resistance. We also can find that testing level has took place here on the support line and on the resistance line. It often happens that both levels become psychological barriers for traders, and they tend to buy or sell once a level is reached. This only strengthens the result. If price touch or breaks throughout the support or resistance level but jumps back fairly quickly, it is only testing that level. But if price breaks throughout any given level for a longer period of time, it's likely to keep rising or falling until a new support or resistance level is established. We can take a look on one more example. Then, as you can see, support level, the price closed below 1.4700 support, but eventually rose about it. That is highly important to set stop losses in such cases. So there are 3 types of levels. It's support, resistance, and mirror. Support is a level that keeps the price above itself. At the top doesn't allow to fall. A resistance in the line that levels price below it doesn't allow it to go up. And a mirrored level is a line that in the recent past was resistance and now has become a support level. An important property of all levels is that they can change their appearance depending on the price movement. So any resistance sooner or later can become support, and any support can become a resistance. It follows from this absolutely any level can be a mirror-like. As we can see from chart of Google, there was a support level and the resistance level. And after that, our resistance level became a support and new resistance level has been formed. So practice, only practice, will help you to correctly indicate the levels. First, you should practice determining levels on the chart of past periods, then planning on the current time frames. After that, you can already proceed to trading based on levels. I fully recommend you to take a look on trends. They also bounded with the resistance and support levels. But for today, that is all. Wish you great trades. Keep calm, stay well, and see you soon.